Good afternoon. This is Albert Pineda with exercise 5 from chapter 3, which was my given assignment question for this week. This question is found on page 144 and 145 of our textbook for Accounting Financial System of chapter 3. Okay, so the question I was given was, we were given specific information about Wolf Company, their assets, liabilities, their stockholders' equity, and all the transactions that occurred with that company within the month of August of 2017. The question that I was given was to prepare an income statement, a retained earnings statement, and a classified balance sheet for that month of the company's existence. The screen that you're looking at here is information given from the book. Again, it contains all the important information for this problem. So if we go ahead and skip ahead to the first section that I'm going to be covering, which is the income statement. For an income statement, obviously we would put the company name first, the type of statement that it is, and the period that it's covering for the month ended in August 31st, 2017. The revenues, if we go back to the previous screen, we can see that the revenues, according to the information given to us from the problem, was $9,500 in service revenue. So we would plug that in first here. That was the only revenue source for Wolf Company. So next we'll go to the expenses. And if we go back to the previous page, we can see that they had three types of expenses: a rent expense, salary and wages expense, and a utilities expense for $800, $3,000, and $300. So we plug those in for the expenses to get a total expenses of $4,100. And the net income, we would obviously take our service revenue, subtract the expenses, and if it's a positive number, then we had a net income. In this case, it was a net income of $5,400. Okay, next we'll go to the return earnings statement, which is similar to the income statement. We have the company name here at the top, the title of the earnings, the title of the statement, and also the period that it's covering, which is the month ended August 31st, 2017. We had learned previously from the question found in the book that this was the company's first month of operation, so the retained earnings as of August 1st would be 0. So we would go back to the previous page for the income statement to get their net income of $5,400, and we plug that number in here for the net income for the month, $5,400. Minus the dividends paid to the company paid. So if you go back to the very first page, we see that the dividends paid was $2,000. So we'll go ahead and plug in the $2,000 here to give us a retained earnings of $3,400. Okay, and lastly, we're going to cover the balance sheet for the Wolf Company. I apologize, my computer screen's cutting it off a little bit here at the top, but at the very top of the balance sheet, properly headlined, it would say Wolf Company, the balance sheet, and then just covering the last day of the month, August 31st, 2017. We would list all of the assets, starting first with the current assets in their form of liquidity. So cash would be first. And again, we get the cash number going back to the very first page. Again, with the information given to us from the textbook, we find out all the transactions regarding cash to get our grand total balance for the month, which was $15,500. So we plug in that number here for cash. Also, we have accounts receivable. So again, going back to the very first page, with all the transactions regarding accounts receivable, our grand total for the month was $4,950. So again, we plug that in. And for all the other assets as well. So supplies, again, was $750. The total current assets would be $21,200. And then after that, we would list equipment, which is not a current asset, but it is an asset. So equipment, again, if you go back to the very first page, the equipment would be $5,000. So we plug in the $5,000 there. For total assets, we get $26,200. And then we go down to the next portion of the balance sheet, which covers liabilities and stockholders' equity. The current liabilities, we had just one for Wolf Company, which was the accounts payable. And again, going back to the very first page, the accounts payable was, here we are, $2,800. So 2,800. Then again, for stockholders' equity, which is made up of two parts, the common stock and the retained earnings. The common stock, according to the very first page, would have been, here we are, 20,000. And then for the retained earnings, if you remember, we go back to, oops, I apologize. Back to the return earnings statement, we learned that the return earnings for the payment for the company, Wolf Company, was 3,400. Sorry, 3,400. So we plug in that for retained earnings. So our total stockholders' equity would be 23,400, and then our total liabilities and stockholders' equity combined would be 26,200. And again, we have to remember that on the balance sheet, the total assets must equal the total liabilities and stockholders' equity to be in accordance with the accounting equation. And that's it. So I hope this video worked out. This was easy to explain and demonstrate for everybody in the class. Thank you so much.